Good day. This is the Elliott Wave weekly update for the S&P 500, being recorded on Saturday, November the 2nd, 2024. The week came, the week went, and we did continue to work on putting in what I am labeling as a minute wave 4. Before I get into that, I want to go back out. Let's start on that 3-year weekly chart. To show that we're just continuing to make progress into what I have labeled as, first of all, we have on the largest degree, we have a primary fifth wave up, and that began in October of 2022. So we are still within that. It will consist of 5 waves of intermediate degree, of which I believe we're very close to finishing that intermediate third wave. And right now we continue to have resistance to do so, about 59, 67, 70 in that area. Now, before I get to that, we need to see the completion of that minor fifth wave, which I believe we are in. And within that minor fifth wave, I believe that we're still within that minute fourth wave. So let's bring it back down. Take a look at the 4-hour chart. This whole move has presented its challenges, and lately the challenges are kind of coming with the market's inability to just really hold on and form a solid rally. There have been a couple of upsets, tosses, and turns, and I am contributing most of that to what we see happening. And so all the outside factors. So we've had the earnings. So there are still earnings to come, and in fact, in what we consider Mag 7, there should still be NVIDIA, which comes out, but not until November the 20th. So we still have that kind of hanging out there remaining. And then, of course, there are still quite a few other, not necessarily NASDAQ stocks, but just other larger corporations that still yet to report. And so, but what we have seen thus far is basically not bad earnings, but not the greatest of guidance for fourth quarter and moving into 2025. Now, outside of that, what we also have hanging over the market is, of course, now the U.S. elections, which are on Tuesday. Also on Tuesday, we've seen a lot of activity at SMCI, the super microcomputer, and where it really has gone from being the super high flyer and the promise of tomorrow to being in the tank. And that is all coming out from their accounting firm quitting and basically making statements that they would not put their name to any document that was produced by the current CFO or the company. So here we sit. Now, on the 4-hour chart, we can see that we have the minor fourth wave that did complete, still remains in place from August the 5th. So it's off that August the 5th low that we've been building, hopefully, to get ourselves back above to, again, new all-time highs to finish this minor fifth wave and in turn that intermediate third wave. Now, I have been also discussing that my feeling is that I think we should go up and likely at least test 6,000, if not get above 6,000, and do what a lot of times the market tends to do, go and test upper or lower collar from JP Morgan. This time to the upside, it would be giving the old test to the upside. That collar, that topside collar, I believe is at 6,055. And December the 31st options, SPX options, that would be 6,055. That's the strike. I believe that's where it is sitting. And the put, I believe, is down at 5,450. So collar still remains pretty steady. Now, can either side be touched? Absolutely. Can it be done by December? Depends on what the trigger would be. But speaking of that, I do think that the count would definitely allow for that type of a move. Now, let's kind of dive inside what I've got going on, and that's inside this minor fifth wave. And so the preferred count remains that we are in the process of putting in the bottom for the minute fourth wave. I'm going to drop this down to the 1-hour chart, and we can see there sits minute wave 3. We have A, we have B, and we're just looking for quite a normal C wave. Now, could we be done? Not the way that the cash left the market. So I think in the C, we have 1, 2, 3, 4, and we sold off towards the end of the day. And that leaves open that we're likely finished expiration and now moving back down to put in that fifth wave. So wave 5 of C, of the minuet C, and to put in the low for the minute wave 4. And our target area remains 56.75 down to 56.70. And that is 56.70 level is for that minuet. Excuse me, it's going to be the sub minuet wave 5 of minuet wave C of minute wave 4. Now, here we go. We have some support at 57.09. Now, let's take a look at outside of the fibs, outside of the Elliott, what really has been controlling a lot of this. As I've been discussing, at least during my daily updates, the 5,800 remained a fairly important level. Below 5,800 starts to throw some negative shade on the gamma atmosphere, the gamma situation, and start to turn it more towards a negative gamma. Well, now we are definitively within that negative gamma because we've continued to drop below 5,800, below 5750. Again, basis the SPX. Now, we've had that put wall, so we've had a put wall at 5,700, SPX, 5,700, and it came down on Thursday and gave it a look and a test and closed just above it on Thursday. So we ran in that kind of that negative danger area while we could gap lower on Friday or move lower on Friday. And what would happen if that put wall got taken out? It could produce a much stronger decline, which actually I am kind of looking for to finish the minor 4, but it didn't. In fact, we gapped higher on Friday and prepared, I guess, for Friday's expiration. But basically, I believe the market, you walked in and the market was like, no, we're not going to break that put wall right now. In fact, we're going to move away from it so we can monetize it, and then you can do whatever you want. And they monetized it, and then it started to come back down. Now, that would be what would be expiring on Friday. So things either got moved out. So 5,700 is now moved out because it remains the put wall. And as long as it remains the put wall, that level is not necessarily flashing a danger zone, but it will, if it gets broken strong enough, it will cause a reaction. Now, is that going to be enough to just bring it down 25 points to 56.75, 56.70 into that area? Or do we really start breaking down from here? Now, my preferred count suggests no, we don't. I think if we start to break below 56.70, it's going to open a door and provide a quick drop back to 5,600. Don't forget the rally phase all the way up to those levels was strong enough that it really doesn't leave us a whole bunch. We have down here, we have 56.73. That's our next stronger support area, and it should be pretty strong for this fourth wave. A break starts to lean towards there's something else going on. But we don't have, as you can see, until we get down to 56.10. So if we start to break below 70 with some strength, it's going to be it should be a quick trip down to 5,600. And that would, again, be our next level where they would be talking and looking for some major support to come in if the intent of the market is still to go up. Now, my analysis continues to lean more on that the market will hold these levels. We may see a completion of this minute wave 4, and then we should start to rally strongly. Now, what happens between that? Should it begin on Monday? What else do we got? Well, obviously, we got the election on Tuesday. We got the Fed on Thursday. Two big situations that will ultimately have a strong influence on direction. and some quick breaks and some more severe adjustments. Now, I say that because if we start to break below that put wall, regardless of what the catalyst may be, it's going to accentuate and produce more selling. And what happens then, since we are in a negative gamma situation, it gets accentuated even a little bit more. So we get into that scene where, remember, risk on trades doesn't seem like the market can catch a sell. Any pullback becomes shallow as the buyers are constantly there because they're moving that capital into the underlying volatility, and the underlying being like Apple and Amazon and all the different stocks within these indexes. So when that occurs, then they're buying the calls, the dealers have to sell them, the dealers have to purchase the underlying. That forces the index up, self-fulfilling, right? What happens on risk off? Well, you got to get out of that position. And either you can do it by selling the calls if they're still being traded, you sell the calls, and then the trader has to sell. And if you're already sitting in a position that's been triggered because of the put wall, the more it goes down, the more you have to sell. If you're holding that part of that put position that got taken out. In other words, the level got taken out. And as it drops, that position gets longer and longer and longer because we're going to assume that it's short puts. That it's long puts. So the harder it drops, wow. Let me back up. Boy, short puts, and the harder it drops, the longer. That's really what I meant to say. The longer the position becomes. So again, let me make reference because I totally reversed that even in my head, and then I actually said it. If 5,700 triggers the decline or the opening or the destruction of the put wall that's at 5,700 SPX, it will create additional selling as adjustments will need to be made. The deeper that drag lower starts to break down, and we start to break, say, between 56.75, 56.70, then it's going to produce another situation that the position holders, right, the short put that's there at 5,700, they, as the market drops, are just getting longer and longer and longer. That's the function of that gamma. It's telling you you're going to pick up some long, you're going to get long as this drops. That then forces additional selling. So, and that could really start to put additional pressure on the market. That, along with anything that may be happening as an outside catalyst, i.e. the election. So again, here we sit at that point where we're going to find out. So I got both sides going. If the election comes in, it's not contested, and it doesn't look like it's going to create any friction, then I would suspect that the market kind of figures out its bottom and we start to head higher to finish this minute fifth wave up, or start the minute fifth wave up and get it underway. And then again, we might get an extra boost or not on Thursday. So this is what I'm thinking. I'm thinking we got a lot of this stuff that really should finish up. Now, seasonally, those charts remain to show that equities have a very strong favorability to rise and rise strongly. So the seasonal charts are basically showing we should have a pretty strong rise in the equities. So we're not seeing it yet, right? I mean, we do it a little bit here, we do a little bit there, but then they're factoring in, what are these guys saying moving forward? What is their guidance? And that's what's been catching the market a little bit. The numbers themselves are not so bad. It's this guidance that's getting it. And then we have geopolitical pressure and also the election pressure. So here we sit. Downside, I think we have continued support 5,700. A break, I think an initial push brings us down to 56.75 to 56.70. Maybe we'll look and say, okay, 65, 60, but I really don't want to start saying, oh, yeah, we got to accept it all the way down to 50. We'll see, because if it gets there and it bounces strongly, well, then we've got a little bit more evidence. But to say without it happening, oh, yeah, it's definitely got to stop there or here, or what would constitute stronger break, and now we're heading to 5,600. Again, I think below 56.70, we will be able to judge and see the strength of the sellers. Are they just coming in going like, boom, we're getting out, boom, and it just drops and starts to drop precipitously? Then, of course, you've got your answer. Or does it kind of come and then some buyers step in and push it real strongly in the opposite direction real quick? That's additional. That's evidence that we'd be looking for. Now, below 56.75, 56.70, we have support via the 4-hour 200, which is at 56.21, and then a fib level, which is 2.618 for that C wave. Still possible, but it's out there. It's not number one. It's not number two. It's not number three. It's like number four in terms of popularity or acceptable levels. And that's at 56.08. So we're getting down there. We're looking very seriously as to what's going on, what can be producing it. We can't forget we got geopolitical situations now, and they're brewing. Right now, they're still sitting in neutral, but they can escalate. They can be put into hyperdrive real quick. And particularly when we have Iran threatening to retaliate, or not threatening, but they say they are going to intend to retaliate against Israel and the U.S. ally, quote unquote. So they got that one going. We also know that North Korean troops are now with the Russians at that border with Ukraine. So very volatile. Okay, who's going to throw the next punch type of situations? All combined with an election that we don't like, or whatever may offset anything that the Fed will do. And again, yeah, everything's up in the air. That is also being reflected in the market. Now, let's quickly talk about what is the alternate here in the S&P. For me, the alternate would be, and I've presented this during the week, where this high, so let me take it back out to that daily chart, and let's just open it up. So a daily, we have that minor wave 4, and then we're in a minor wave 5. But we have a chance where it's 1, 2, 3, 4, does not break any rules, and then we have an extended fifth, and that minor fifth wave ended right there at 58.78. Didn't get to 6,000, but it definitely was a new all-time high, and it was producing new all-time highs pretty quickly. And we're starting to go down. So what that would suggest, not necessarily as clear or clean, but we got 1, 2, and then we're coming down in a 5-wave structure. But is that going to be one of 3? I don't know. There's a whole bunch of interpretations that we could toss. We need more evidence. We need more trading to really wrap around it. But as an alternate, and we're suggesting that since that would be the completion point for minor wave 5, it would also complete that intermediate wave 3. And if I have to do that, or if the market is telling us that we have to do that, then we still can use it, because 3.618, a fib 3.618 as a 59.67. So that means we've had several, all before that. We've had 100, we've had 1.618, 2.618. Those have all been very much taken out. So it does come down to structure. And if we can count, and it gets labeled as that 5 because we're breaking here. And honestly, which would toss it into that count, no matter what, would be a break below 5,400. Then again, a break below what we are considering the high of wave 1, and that is 53.58. So if this wave comes down and breaks below that, it's going to weigh very heavily that it's all done there. And yes, I get it. The high being above 5,800, almost 5,880, and so we have to wait until we break below 53 or actually 5,360. It's a lot of points, but it's like that's the reality of that position. And if you want to do it on an Elliott wave basis, I believe there'll be a lot of people and we'll have a much stronger clue because of whatever the catalyst is going to be to take it. It will also let us know. And again, remember, what I'm looking for is the completion of intermediate wave 3. Then I'm looking for an intermediate wave 4 and then an intermediate wave 5. What goes against that? The seasonality. If we're looking for the strong rally for year end, now seasonally, that's usually the case. Seasonally, if we go back, we've not been dealing what we're dealing with right now. This is the completion point of the presidential 4-year cycle, a very regular cycle. Well, we're there. Either we are topping, and since we look at where we are in the market across the board, are we considering that this is overvalued? Many people are, blah, blah, blah. Elliott can kind of put us into completing an intermediate third wave. Intermediate wave 4 would be expected to bring us back down to this minor fourth area. So we're looking at 51. So from 58 to 51, 700 points. And that also could happen very quickly, right? i.e. August, right? Started in July, finished in August, and it was less than a month. Start in November, finish at the beginning of December. I don't know. Happens in less than a month. Higher starting point, but that intermediate fourth wave, that's the zone. And I'll put in fibs should that be the case. But we would be looking for it to come back to within the price territory, and it's usually at the low end of that price territory of the fourth wave of one lesser degree. One lesser than intermediate 3 or intermediate is minor, and that's where it is. So I'm not looking for the world to fall apart, but I'm looking for we could get a bigger move here. That's the thing. But before we enter that, I do believe we should head higher. We've got some breakpoints that would suggest it's done. So presented the preferred, still looking for the upside, and also the opposite of, well, if that third is done. Now let's look at the futures market. Now, same deal. So I'm just leaving it here for a minute. We're in that fifth, and we're still within primary 5, but we still are just looking for the completion point for the intermediate third. And then now for that, we're looking within to get the completion point for the minor wave 5, of which we also are looking for the bottom of that minute wave 4. So I'm going to bring this down to the 4-hour chart and open it up so we can get inside and take a look. Bringing it down, there is that minute third wave. There's the minor 4, and I have 1, 2, and 1, 2, 3, 4, 5. This is how we bring that 3 and bring it down to here. It's the same deal. See, we have it. And I talked about this before and thought, oh, it's pretty short. And now how are we going to get all the way up to where we need to be? So I did 1, 2, and you can put the 3 there, put the 4 there, and your fifth wave is the one that's extending. And you could do 1, 2, 3, 4, and there's the 5. So I could put the minute 5 here, and I could put the minor 5 here. And that high, yep, it's an all-time high, and it came in at 59.10, but we'd likely have to, let me go on to that daily. Yep, it broke there. So that's an all-time high. It can very cleanly be the end. That's the alternate. So now we have both. Now, working within that framework, that we're coming down to the completion point for this minute wave 4. And I still have them in parentheses because they're still active. Oops. They're still active. Nope. I wanted this. Yeah, sorry. Oh, for God's sakes. I'll do it later. Moving the C down. Let me bring it down to the hourly chart. We have the A, the B, we're coming down in the C. Now, we have A, B coming down in the C. 1, 2. 1, 2, 3, 4, 5. And then we start to go back up. Or actually, I can say 5 here. A, B, 1, 2, 3, 4, 5, C. So the futures market did basically the same thing. So we have 1, 2, 3, 4 inside, 4 of C. We're looking for a fifth wave. We start to come down. Is that 1, 2? We're going to break. We can. Now, if I just put in, if that's 4, here's 1. We run it over. Now we got the fibs for the downside. So 100% is where sub-minuet wave 5 would be equal to sub-minuet wave 1, and that comes in at 57.38. We're looking for it to get below 57.30, or 57.32 to be exact, to put in that fresh low to complete minute wave 4. Now, so I'd be looking for a little bit more, but if it came down there, kind of be a weird pattern, but if it came down there and then spiked right up and out of there, it would be a small failure, but we'd take it. I would take it. And I'd put the 4 there. Small failure. Otherwise, we kind of come down, we break through that, we break through that. But again, here we are. That put wall in the ES sits at 57.30. That's right here where we already were. So they went down in Globex, right? Halloween night or evening, the market went down and tested that put wall. It held, and they moved up the balance of the Globex session until we came in and we were ready to start trading, and we were already well above that level. 57.30 in the futures, that's the put wall. We were up around 57.60 by the U.S. opening on Friday. So they had successfully secured that level and then ran the market up to 5,800. I believe that gave them the opportunity to kind of take care of that 5,700 situation, although it still sits there. But who needed to do it probably got it done. Expiration over, and they were monetizing the 5,800 strike, anywhere in between, and we started to come back down. So if I counted out 1, 2, 3, 4, coming down in a 5, 57.38, I think could be a pause. But ultimately, I think the market could come down. They're going to go through it. They're likely, but I think we have support directly under 5,700. But remember, in the futures market, that point is 57.30. So I think a break of that level can push the market down to 56.97 to 56.95. So we can say 5,700 to 57.90. Now, where else do we got? Well, if they kind of go through that, here again, we're in that same situation where if we start to break below, say 56.80, and they're just hitting, I think that we don't really have much to stop it until we get down to 55.70. I think breaking below that 56.70 level can open the door that the market may not be the happiest with, but that will force a lot of adjusting. And we can come down. Still could be that minute 4. I'm going to go back out to the 4-hour chart and let's just do a comparison or a look. So where can't it? There's the minute wave 1. So minute 4's got the room if it needed. But there it actually is the level that the minute 4 should find support, because there's the minuet 4 of the previous fourth wave, and that's where it is. So I'm looking for a little bit of follow through. I'm looking for, yes, I do believe they will break that put wall, but now we're going to see how strong the reaction would be. And like I've already discussed, we got a whole bunch of stuff sitting there on the wings that could be a catalyst for up or down. All right, so that's actually the deal for the S&P. If returns start to go upside, so one of the questions I kind of got asked is like, could we consider that wave 4, minute wave 4? I'm like, now as I see it, no. At the time, I thought, well, we need to see what this would develop into. If this was going to develop into a 5, then like 1, 2, 3, 4, and a 5, yes, then the easier to declare this 4 done here. But it did not, and it left a 3. So it's 1, 2, 3, 4 coming down in the 5th to put in that minute 4th wave. All right, so that is going to be it for today. Moving averages, I will finish up with that. Take a look at the daily level. We can see that the 200 broken, went down a little bit, came back up, but it's flat. And that kind of tells us they're not done. So we have the 20 and the 8. The 8 is now broken below the 20, and that gave another accentuated push, and we may see more. Now, the 50, if it starts to turn lower, you're going to see the 200 start to go flat, and it's going to go flat around 54.75. And that'll be a line in the sand. We may see put walls get shifted and put down here. And because below that, remember, 54.50 is ye old JP Morgan. So we got a lot. All right. So the next daily update will be on Monday, November the 4th.